Welcome to Simplified Profits. With over 23 years of experience in the stock market, I'm Anthony Calhoun. Just make sure you subscribe, turn on your notifications, leave some feedback, and let's take a look at the market as it looks very strong, ladies and gentlemen. Let's take a look at what happened last week as most were up about 2% last week, 1 to 2%. And let's see what we think might happen this week coming up. We got a lot of stuff going on around the world. But we try to block out the noise and look at the stock charts. Like I said, they look very strong. We'll also take a look at our transparent account, which is still beating the market. And we'll see where we're heading with that. We'll take a look at the positions in it, take a look at what we're up, and kind of also just take a look at any scans out there, some of the other major moves that's happened in the market. And let's get started with SMH, the semiconductor ETF, which is the biggest gainer year to date, up 9.3%. So if you would have bought it in January, which believe it or not, we actually did, we actually bought SOXL. I kind of kicked myself a little bit for selling it. Should have at least left my profit ride, but it kind of weakened out right here. I think we took about 13% profit. If we would have held, we would have been able to lock in about 50%. If we went to the top, about 60%. And we'd still be up about 34%. Now our goal on that trade was 20 to 30%, which we would have got, but we made some other moves, got out of it for some cash flow, which same with the Quad X. We actually entered that based on SPY. I don't want to start jumping around, but we entered that here, locked in about 10% profit. Both positions would be up more by now, but it is what it is, right? You never look back. Don't get upset. Take your profit or somebody else will. As long as you're compounding profit, you're doing very well. So as we see in SMH, it pulled back. We were expecting it to pull back to the oversold territory, which it doesn't look like it. It looks like it is reversing, heading up. Might set another new high, ladies and gentlemen, which is crazy. Might hit 200, which it came close to before. Usually go with even numbers, usually kind of set new support or new resistance. So we could see 200 very soon on that. But there is a lot of stuff going on around the world, ladies and gentlemen. And I broke one of my rules this Friday and shorted the market, which I never do. We'll talk about that more here in a minute. But if you look at the hourly chart on this, it could keep running up easily, but it's kind of looking gassed. And I'm expecting an hourly swing down, just like the daily, the monthly, and the weekly charts. Hourly charts are going to swing. And once I added that position, I kind of wish I didn't, because I can break my rules and manage that position fine and be okay, but I'm not recommending that for anybody. Okay, I'd never recommend shorting the market. So this position I added to the transparent account, I put when I posted, it's not recommended for anybody. Don't short the market. It can really burn you. Now I still got 50+% of my portfolio in cash, so I can manage that position. Like I said, it's going to swing regardless. Markets swing, that's what they do. But SMH is looking strong. The entire market's looking strong. But keep in mind, Friday after the bell, we did drop some bombs in Iraq and Syria. If you look at Taiwan, which is one thing I've been paying attention to, and that just seems to be escalating. As I think there was like 200 something Chinese ships off of one of the reefs just recently. Philippines was kind of worried about it. The elections didn't go well for China and Taiwan, so they're, and keep in mind, they stated the election's either going to be peaceful or it's going to create war. And honestly, I feel like they could take Taiwan right now. We wouldn't blink an eye. There's too much other stuff going on. They could walk in Taiwan and basically dominate, take control of it. And the question is, what would happen to semiconductors, honestly, because it would shorten the supply. Demand would still be high. So stocks like NVIDIA may rally, but you also got TSM. That would drop pretty hard. Now, the thing is, the amount of money it would take out of the economy I mean, they would predict, I think, $2 trillion out of the global economy. So I think everything would drop pretty hard. Um, but you may see, just for supply and demand, you may see some of the American chip companies actually rally because they would basically be taking up the supply from TSM. Now, the thing is, could they actually fill the supply? That would be another question. So I don't think anybody really knows what would happen. I think initially everything would kind of get hit, uh, but that's all just assuming, right? Nothing. Odds are nothing will happen. But man, tensions look tough and tight all around the world right now. Let's take a look at triple Qs. So last week, SMH jumped 1.57%. All right, so that was it for the week. Now, mainly because I had a pullback up 9% for the year. Triple Qs, it rallied 1.2% last week. It's basically sitting at new highs. So whether or not that'll become resistance or not, and we'll see that come down. Now both of them look like they kind of pulled back. This didn't even touch the 20-day moving average. Honestly, if it touched the 20-day moving average, I probably would have went long, and it probably would have gave me some around the 50 in stochastics. Now, I only buy when it's oversold, but when it's a strong market or a strong stock, you got to keep in mind. Sometimes it don't hit oversold. It will just bounce off the 20-day moving average all the way up. Might come down to 50 or 60 on the stochastics. You just got to pay attention to the candles and what the overall chart looks like, because you're basically reading investors' mindsets, basically like investor psychology 101. I don't even know why that's there. We might as well move that up a little bit. That's going to be the resistance for the triple Qs, which went up about almost 5% year to date, 1.23% last week. Friday was a big day that obviously made it for both of those stocks. Now, SPY, which is S&P 500, it's at all new highs, ladies and gentlemen. Looks strong, like the rest of the market. Question is going to be, the Fed didn't sound really too positive, right? It doesn't sound like they're going to cut rates as soon as the market thanks, especially with the strong jobs report that came out. But I don't know who would have expected them to, because their tone really hasn't changed, even though you have a bunch of these, fund managers coming out and saying what they think's going to happen, basically as gospel, which it's not that. So S&P 500 went up about 1.5% last week, 4% for the year so far. Keep in mind, semiconductors were up 70% last year. Triple Qs were up 50%. SPY was up 20%, and Dow Jones was up 10%. So I mean, it's strong, especially to be up 10% already within a month after doing 70%. So then we get into things like oil production and exploration, down 5%. Biotech's down 1% for the year. These are sectors I really don't trade anymore. Periodically, if something looks really bullish in it, I may jump in. Oil couldn't hold the 200-day. Now, as far as what I'm looking for the long term and what I build positions in, energy-wise, is nuclear energy. So we entered this. I think we'll take a look here in a minute, but I think we're up about 5% in this. It's a nuclear energy ETF. We picked this up on Friday. Ladies and gentlemen, I really like this stock, and we'll take a look at the position we built in it. So I was basically going through looking for some sleeper stocks in the defense area, mainly because tensions are rising. And this company, when you start looking at the laser technology, they have some really good laser technology, and they have a ton of military contracts already. They're working with Northrop Group. These are the lasers that's shooting drones out of the sky right now. So, and they're putting them on helicopters to shoot any incoming rockets out. I don't know how many defense companies we see bought out compared to like biotech and tech, but they're in cybersecurity. They're touching a lot of areas in that market. Their earnings isn't as strong as I'd like to see right now. They are positive cash flow. I usually don't mess with something unless they're making really good money, but their PE. So in my brokerage, it's 30, and when I look it up online, it's 30. But right here, it's showing 185, negative 185. They do have positive cash flow. They did just raise some money not too long ago, so they're not the strongest financially right now. But I do think, I mean, they're not burning money every month, every quarter, so that's good. But here, last year we built positions in BWXT for Trizo Fuel for Project PO, which is a government contract. Try to follow the monies, ladies and gentlemen, but we've been building that since January of last year. Our initial entries up 44%. I got that in like 4 other accounts. It's up probably 35%. We bought it on every pullback. And this is, I would say, besides GTBIF and the cannabis sector, this is my favorite stock right now for this year. We'll see how it goes. Anything could change. You could dip under the newly started 200-day moving average. Earnings could come out in February, which they do, so pay attention. And tank the stock. But right now, I do have a small position in it, and I'm gonna build a position and kind of see what takes place. I think it's up about 100% since its IPO. Yeah, 110%, somewhere like that. I'm sure I didn't hit the exact numbers. And how I broke, so we got a small position in DIV, which we'll go to our positions in a minute in the transparent account and take a look. Almost added some of that on Friday, but I don't expect a lot of growth in this. This is more for just monthly dividend income, just to see how it grows when we add it on pullbacks. So I almost bought a little bit more on Friday, but I'll wait. I'm not too pressed about it. We are up in that position, as we are all of our positions, besides DRS, which it just kind of dropped a little bit on close. Nothing I'm too concerned about. I think it's building a bottom that's trending up. Obviously, you could draw a line there too and create, a sideways flag and see which way it breaks. But earnings could determine that, or next week could determine that. So how I broke one of my biggest rules, shorten the market. I bought SOXS. Now I wish I would have done it in a different account. It's because it's my transparent account. I'm trying to teach my rules, my fundamental rules of trading, and this ain't really one of them. I never short the market. I don't like the mind frame it puts you in, and I don't like betting against the country. But right now, I went ahead and made the move. Really looking at the hourly chart. So it's a small position, small amount in our portfolio. We'll take a look at that here soon. But I mean, if the hourly chart swings, we're looking at 10%. I would probably lock it in there. I might lock it in if we're up on Monday, just in that account, and move it to another account, just because it don't follow the rules I'm trying to teach in that account. Right, my son just to give you an example, my son started his account, his first brokerage. He just turned 18 last month. His money just cleared on Friday. He's been working, stacking money up. Still in high school, but he's putting his money to work. And Friday, I entered 2 positions, this and this, which neither follow my strategy because this isn't oversold yet, and this is short in the market. So I told him not to enter either. Right? I don't want him. What I would recommend for him is waiting for these to pull back to the oversold condition. It might take another month. It might not be till the end of February. It could be next week. Nobody knows. But that's when we will enter. When the market is oversold, whether it's semiconductors, whether it's SPY 500, whether it's triple Qs. I mean, so far it's been almost a month. Sometimes swings take a couple weeks. Sometimes they take a couple months. So I would say within a month we'll have an oversold condition. Now here it may rally up to 455, come back down to where it is now before it hits oversold, but that's when I will put money to work because that's my strategy. That's what I feel comfortable to wash and repeat and be consistent at over and over and over again. So that is where we're sitting in the market. What I'm looking at coming up next week. Let's take a real quick look. We'll take a look at some of the big movers last week. Meta and the Mag 7 in the high cap was really one of the biggest movers. Now, when they came out and offered a dividend, which was minute, and a stock buyback, keep in mind he was getting drilled in Congress at the same time, Zuckerberg, and then Congress is starting a lawsuit with Meta. So, as far as I'm concerned, that was almost like a distraction for the company. Don't get me wrong, it works for shareholders for sure, but I'd be cautious. I'm not a fan of Facebook, but we've been calling the pullbacks on Meta every oversold position, saying it'd be time to add if you're a buyer. The other high, I mean, we can go ahead and jump into Meta. Amazon killed it. Basically, everything in Meta, we were saying buy. Nvidia is a breakout, besides Tesla and Apple. And I'll show you why. Microsoft, this thing's just a monster. We were telling you to buy here. Google. Now here we did show. Just happened there. Did say that was a breakout, but ladies and gentlemen, that's why we sell when it's overbought and we don't hold through earnings. So yeah, we would have missed Meta's breakout. We would have missed Amazon's breakout. Nvidia's breakout. Well, not really Nvidia's, because I think that was kind of after earnings. Not even really sure. Microsoft. We would have bought the. I mean, unless it's a position that we are holding for the long term, we don't hold through earnings. So all my positions I hold for the long term, I'll hold through earnings because if they pull back, as long as they don't break the 200-day, I do still believe in what I bought them for, and I'll continue to add. Now Tesla, we called this a while back as our least favorite chart in the Meta. Back here, after it crossed over the, no, actually right here, before it crossed under the 200-day, the highs were getting lower. It just looked kind of bearish. And go back and check my videos. You can. I don't hide anything. Go back and look at the videos. And then it crossed under the 200-day, and we've stated it multiple times. We don't like Tesla stock chart. It tells us all we need to know. Same with Apple, because it's getting too close to that 200-day. Looks like a triple top. Not a fan of it. Didn't close under the 200-day, but boy, it almost did. So see how that works out. We had a big mover, it looks like, on Friday. These are probably all earning moves. A lot of truck companies popped. This is one of my favorites that we've called many times on pullbacks. There's a lot of big earning moves last week, probably to both sides, up and down. I hear you had a 146% gain. What a killer gain in a stock. But look at this stock. I mean, it's a turd. Who would want to hold that? I mean, that just had to pop just so people got close to getting their money back. I mean, this thing, ladies and gentlemen, don't hold nothing like that. That's just my personal opinion. This is all for educational purposes anyway, but I mean, some of your biggest poppers are your biggest losers. Like, get in bullish stocks. Don't be in crap. All right. So let's take a real quick look. Take a look at the basically what we're holding in our portfolio now. Instead of going to the account, because they also want to take a look at compound interest for y'all, which I just kind of want to show you. Yeah, we're up maybe 7-8% for year to date, right? Basically got that in January and looking to hopefully do the same thing in February. But I just want to show you what putting your income to work every pay period and just hitting 7-8% a month can compound into on a compound interest calculator. But first, let's take a look at the positions. Now, I'm not going to the account. I took screenshots because when I go to E-Trade, I'm doing a video, usually it'll time out, log me out. I'll have to log back in, and there's like 5 different areas I need to, block out the account number instead of, which the account number on here. I mean, this is an account I don't even use. At one point, I tried to use Interactive Brokers because they do line up with PC2000, so I could put buys and sells on PC2000. That based on the stock chart, it would buy and sell it. in my Interactive Brokers account, but I hated just the layout of Interactive Brokers and just all together. So that lasted about a month, and I just stuck to E-Trade. But basically, what I'm going to do is just show you screenshots of the account because it's easier. I don't have 6 different areas I need to, um, block out the account numbers. So let's jump to that real quick. 1 second. All right, so here's the positions. So take a quick look at them. So as you can see, we have NLR, which is our nuclear energy portfolio ETF. We're up 4% on that. We only have 14% of the account in it, 7 shares. Our entry was 74.85. Next screenshot I'll drop these down. I'll drop the prices down so you can see how many buys we've made in them, because we will average positions, right? We'll enter more than once. So that is 14% of our portfolio. DIV, very small position. Like I said, this will be something that we do just to kind of get an income position in there. I know a lot of people love dividends. I do myself, which honestly, NLR pays a decent dividend as well, about 4%. And that's only about not even 5% of our portfolio. We're up about 1% on that. SOXS, that's what we entered Friday. It's about 13% of our portfolio, and we're barely up on that, about a 0.25%. DRS, we're down 0.7%, just kind of sold off in the day real quick. Not too concerned. And that's about 12% of our portfolio. And we have $2,000 cash, so we are sitting on about 56% of our portfolio in cash, still ready to go to work, still ready to average these positions down if we need to, especially on SOXS, or enter new positions if we need to. So there wasn't really nothing out there when I scanned. That's kind of why I picked up these 2 positions. Let's take. And this is our performance, okay? So year to date, 7.6%, beating NASDAQ, beating NASDAQ 100, beating the Dow Jones, beating S&P/Y 500. The only thing we really beaten is the semiconductor ETF, but we're just getting started, ladies and gentlemen, not stressing it. So that is where we're at there. Take a real quick look at, because that is kind of what I want to show you guys. All right, so our principal amount was $2,000. Okay, we've 20% of our income. This is what's going to hit the bank. This ain't gross. Okay, this is after taxes, after deductions. $1,400 roughly monthly. Okay, we'll have another pay period come up next Friday, so we'll have more cash flow in our account to manage just for a year. If we continue on 7% a month, that's 84% a year, compounded monthly. So our total principal at the end of the year will be about $18,800, with about $12,000 in profit, for about $31,000 at the end of the year. Now let's take that to 2 years. All right, $35,000 principal, $61,000 in interest. It's about $100,000. Okay, that's in 2 years of just grinding 7-8% a month and putting a percentage of your income to work. Can we continue it for 3 years? Almost $250,000, ladies and gentlemen. If we can continue it for 3 years, maybe we don't. Maybe our account drops like a rock. We'll find out. But that's why you should subscribe, turn on your notifications, because we're going to be doing this live. And let's say you can only do $1,000 to start and $700. This is all educational purposes, but just for giggles. Total principal $26,000. In 3 years, you'd be at $122,000. Now that's, and trust me, I've been doing this for 23 years. I've tried to get rich overnight, right? To make 10% a week, 10% a day. And don't be wrong, I've had some very good come ups. But at the same time, you can easily lose. I mean, you're taking higher risk. The more you risk, the more you're going to lose, right? So this strategy that I'm doing out of the book we wrote, Simplified Profits, is very thoughtful on risk to keep your money safe and to slow grind out these profits. Okay, let's look at the table. And maybe I'll save one of these tables and start checking it off because we hit table 1 for January. So month 2, so the end of February, we should have a total. Let's see here. So we should make 247 for the month. We add that to the 140. That's where we are. And on top of our income, we should end February with about $5,200. All right, so far for January, we were up 7.2%. Let's see if we can lock in